Aussie dollar there as we get this jobs data. Wow, it's just spiked up. I'm going to bring in Nick Twidale from ATFX to talk about this in a moment. But September employment up 64.1 thousand, well above what the market was looking for of 25,000. The unemployment rate there at 4.1%. The full-time employment came in at 51.6 thousand. So most of those jobs actually coming from the full-time area. And the participation rate even higher, 67.2%. So showing that pretty much a record number of people out there looking for jobs. Look at the Aussie go. Nick Twidale from ATFX. Your thoughts? I mean, a massive beat again.
That's a huge number, isn't it? I'm a bit shocked, to be honest. And an unemployment rate coming down, which will probably be the headline that hits the major channels later on tonight.
Yeah.
I think there's some room for a decent rally in the Aussie, but I think overall for the Aussie dollar, we're still going to get sellers on rallies because of that dollar strength across the board. So, bit of a surprise, and full-time employment data coming through that strongly as well, I think is positive for the economy. So, it's probably going to put the RBA on hold for even longer,
on tenterhooks,
isn't
it? Yeah. So I'm just going through the detail now from the ABS, as you say. I mean, the seasonally adjusted terms, we did see unemployment remain there at 4.1%. The participation rate, though, increasing, underemployment decreasing to 6.3%. But yeah, it really is this full-time aspect, which is a big surprise. 51.6 thousand full-time jobs created, and that's given that overall figure there of what did we say, 65,000, which is well above what the market was looking for. All right, let's get into your chart as well that we have on the Aussie dollar and just talk more through, I guess, the technicals, because the other aspect here, you just mentioned the RBA may be on hold for longer. It really is going to be the interest rate differential when everyone else is cutting, and we're going to be likely to stay on hold.
Yeah, and I think that number sort of backs up what we've been seeing. Now, obviously the Aussie's come down relative to the dollar in the last few weeks, but it's still remaining relatively well bid on the crosses, especially Aussie yen. But I think, and probably even from that reaction we just saw in the spot market, that's 20 points off. It was around 66.70. It's moved up to 66.90. That's not as big a reaction as you'd normally expect with such a beat. And I think that's just because of the trend that we're in with the Aussie. So I think we're around 66.90 now again. I think we'll probably see traders fading it above 67 cents. There is some options actions around that level as well. So I think overall, to me, it probably less against the dollar because we've got so many unknown factors coming in the dollar, especially with the US elections coming up. The Fed, I was writing a piece today about the Fed expectations. I think it's 94% today that we're looking at a 25 basis point cut from the Fed.
Yeah.
We kind of had those numbers in September, and then it flipped within 3 days and we got 50 basis points. So we don't know whether we're going to get a similar sort of pattern that plays out in the next few weeks over in the US as well, especially when you throw those US elections sort of. Yeah,
there's so many uncertainties. What is this hourly chart though telling you here in terms of those red lines? So
this is probably, so we've got some decent support there, and it's a weak support trend line, but we've got just under 66.60, 66.50 was probably the level. So bulls now can afford to look to get some Aussie on board, and there's a nice easy stop loss probably under 66.50 just from a trade perspective. I was looking for a break to the downside, but once again, as I said, I never get those employment numbers right. So
well, I think I said to you in the break, pretty much no one does. I used to work with an economist who said it was like closing your eyes and throwing a dart at the dartboard. You know, it is just such a volatile series.
I think it was. We used to have coffees on it and all sorts of things.
Yeah.
I remember buying coffees on several thousand occasions because of it.
All right, what is cable telling us? Maybe a little bit more stability here, perhaps.
Yeah, a bit more stability. Cables, it got the move down that we were looking for. So big week for sterling and cable in particular, because a lot of sterling data and not so much US. So it's got a nice. We actually had worse data out on Tuesday, which was their employment figures, but we got a slight rally. But yesterday CPI came in lower than expected by 0.2%. That hit us, and we're down safely under, and that's probably a better chart. That's the hourly chart. You could see where it had similar pattern to what we just saw in the Aussie. And then we got a good breakdown overnight and sitting underneath 130 again. So I think overall for cable at the moment, the trend is definitely to the downside. We've got the dollar moving up, and then we've got weaker sterling numbers. That opens the way for the MPC to give those cuts that UK households are looking for in a similar way to Australian households are probably going to be disappointed with the employment data that we got.
Yeah, you would think. Okay, getting to the euro there, you touched on the US. I mean, this uncertainty over the US election, and if we do see a Trump 2.0, pretty much everyone's told me it's just watch out for dollar and gold. They're going to go to the races. What does that mean for the likes of the euro?
Well, I think, it's the biggest trading currency.
Yeah.
Data's not looking particularly brilliant out of the Eurozone. It's going to be interesting to see what Christine Lagarde says today if we get the expected 25 basis point cut from the ECB. I think everything's pointing to downside for euro. So normally we'd probably buy when I come on TV and say that. But I think that's really the direction we're looking at. Trump does look to be sneaking ahead, doesn't he? But it will come down to those US elections, whether they get that clean sweep, the blue sweep or the red sweep. If they get mixed government, I think we're in for a bit of trouble. But once again, it's probably topside for dollar again as a haven buy, but probably not as strong as if Trump gets in and gets control of Congress and the House.
So what are you expecting to hear from Lagarde then?
It's going to be very interesting to see what she says. I think me and most of the market are looking for a more dovish comments from Christine Lagarde tonight. And obviously, as long as we get this cut. The interesting thing is we've got this mad hour later today where we have the ECB rate call and statement. Then we've got key US data in the middle of it with retail sales and unemployment claims. And then we've got the press conference. So for Euro traders, it could be throwing your dart at the board again, because you could get the cut, you could get a slightly dovish statement and it comes off, and then you get worse US data or unemployment claims which were weak the week before, and then you've got a press conference which could turn it the other way around as well. So you've got this crazy hour. It's 11 o'clock tonight for us. Between 11 and 12 o'clock, like Euro could do a big figure either way easily.
Yeah.
It should be interesting.
It should be indeed. Now, towards the end of the month, the Bank of Japan meeting as well. I mean, such a wild move in the yen, but it's certainly come down from those August levels. What are you seeing with dollar yen?
I think with dollar yen in particular, we've had this, what's been a crazy 10 big figure reaction really off of 139.50. The chart's just popped up. So we've got 10 big figures because we've had a complete flip. It's been the perfect storm for dollar yen bulls, where we've had what was a future expected Fed 50 basis point cut plus more hawkish BOJ. New Prime Minister comes in and it's like, this is great for the bears. And he does a flip as well. So that's been the rally. I'm now happy to be fading these levels. We've got that trend line support. That's not particularly great trend, but we've got the 200-day moving average at that 150, 130-ish level. I'd be happy, and I think a lot of players are happy fading these moves. I think the underlying fundamentals do push and will push to downside for dollar yen. Maybe not the dollar against other currencies. So we might not get the steep reversal of that 10 big figures, but I think you're fading these moves, you're not going to go too far wrong.
I just want to bring back our dollar again and see where it's moved. Still holding up very, very high after this jobs data really did blow us out of the water once again. So 64.1 thousand jobs, well above expectations of 25,000. You were talking there about the RBA likely to remain on hold here, but we've also got China's property briefing in focus too.
Yes, so I think China data as well has certainly been pointing to the downside. A lot of disappointment of recent times with, especially over the weekend when we heard from the Ministry of Finance that the market just wants more and more stimulus, and I don't know how much they can give it. For the Aussie dollar, we trade it as a proxy very often. I think that's another reason why we've seen downside moves in the Aussie. So we've got a bit of a battle in the Aussie dollar, and it's probably going to put us in boring ranges again, which we saw for most of this year. And that's why I think you probably look for the Aussie on the crosses, because I think we will see the dollar accelerate on the crosses against the other majors. So maybe you look to buy Aussie on the crosses in these